Hello, morning traders. Welcome back to Money Cafe. Aiman here. All right, so let's start with the S&P 500. So during yesterday's session, the S&P 500 dived lower and declined by 1.6%. Also, Nasdaq fell by 2%, which we heard that the AI and also the semicons stock experienced a pullback over stretch valuation. And also, in addition to that, if you see here, the VIX index or VIX index also spiked up higher. We believe that this happened was due to the stronger tension towards the war, and not only that, investors are a bit uneasy ahead of the U.S. inflation yesterday, right? So, all in all, I think the for the U.S. market, right, with the VIX index breaking out higher, and the market is showing heightened sensitivity towards the AI valuation. Expect the S&P 500 to experience a rough ride in coming session as the recent session of the market is now pointing lower towards the 7,200 points level. Right, so now looking at the US trading stocks that we have published overnight, right? So we've got here Citigroup stock code C. So the stock experienced a pending breakout at 135 US dollar. We can now expect the stock to travel towards the 143 US dollar on strong momentum, followed by the next resistance at 150 US dollar level. So now if the counter reverse, do watch out for the 128 level for the immediate support, as it could indicate for an initial trend reversal signal. Also, together with that, we have Alto Neuroscience, stock code ANRO. So look at the charts now. The counter charted a uh, uh, higher high recently. Market structure that forming um, uh, from the previous higher low formation to test and break out above the $21 dollar level. So if the stock to climb up higher, we could see that it might travel towards $22.50 together with the $24 level. Now, if the stock slide lower below this $19.50 level, this might shift to a bearish structure. So, looking at the China A50 futures, right? So, I think recently, many of the China indices been dropping sharply, right? Recently, following the broad risk-off sell-off in the Asian market. Uh, I believe investors and traders are shifting their interest away and pause any decision at this juncture to the safe haven asset due to the escalation in the Middle East also. And yeah, also if you can recall, right, on the latest news in China, PPI jumped higher and the economists are flagging the inflation story, which driven by the higher energy prices as well. So together with that, with the manufacturing demand remains soft, which making it hard for the players to pass through the cost increase to the clients or the customers, right? So in terms of technical, right? The index is now stuck at the 200-day moving average. And if bearish momentum to remain strong, we believe that it could charge lower towards 14,700 points level in the coming weeks ahead. Right. So also, yeah, my concern is that now the index has formed a double top formation, which maybe it could trend down even lower lah, right? So let's wait for this index or this index futures and see if the support level could cap for the further downside movement at this juncture, right? So now if you look at the oil market, right? Well, it went up yesterday above $90 per barrel. Again, I believe we are all aware of the sharp escalation of the war tension, which reignite the war premium as well. So I think one keynote from Trump saying that Iran have to pay the price for delaying the deal have sparked the fear to the market once again. So we see that this is a threat to the oil market and could prolong the disruption surrounding the Strait of Hormuz. However, at this juncture, we still see that the as long as the price haven't crossed above 107 level, negative trading movement still keep intact, right? So now to look at the FKLI and also CI and also FKLI, right? So Malaysia market rebounded slightly yesterday, right? But you can see that the overall trend is actually sideways. I believe the current market movement still negative, where decliners have outpaced the gainers recently. Well, this is due to the market rotating during this risk-off sentiment, which I believe you guys are aware of the heightened geopolitical tension with the US and Iran keeping on fighting each other, right? Despite the negative market breadth, market are still moving, right? So uh, I believe that people still need to invest somewhere. So from here, we can expect the market to give extra focus to the defensive stocks like healthcare, consumer, utilities, telcos, and also plantation. So, uh, technical wise, looking at this FKLI, we are still looking bearish on the FKLI chart after it recently moved in the midterm downtrend and test the 200-day moving average line. Still, the key level that I'm focusing right now is 1007 level, whether to cross or not to cross above this 1007 resistance level. Right, so shifting away from the charts, just to share with you on this seasonality heat map, right? So if you see here, the KLCI are on red for the month of May, which is not, I would say, not something strange, right? Because we just done with the KLCI review. But I believe for the month of June onwards, right, we can see that slight rebound moving into August, September, October, right? As bargain hunting will start to emerge, and we can see a stable movement of the market historically, right? Which I think this supporting by the many catalysts like the bank dividends, the second half review, also the rotation into the small cap stocks, and also some of it is earnings season as well. So now talking about the watch list, right? In terms of watch list, I believe we haven't showed this to you guys for quite some time because we're still we are updating the names recently. And yeah, I think since just now I've talked about the defensive stocks that you can take a look, maybe you can consider some names to put in your watch list as well. So you can take a look at some telco names. We have CDB, TM, and consumer names also like 99 Speedmart, those DIY got here also, right? And also FFB, right? And yeah, looking at the Malaysia trading stocks that we have today, right? So we have Kuala Lumpur Kepong or KLK. So the stock is on its breakout formation higher at 20 ringgit and 36 cent level on a strong volume. So with that, we expect the momentum to keep bullish and the stock able to propel to travel higher to test the next resistance at 21 ringgit and 72 cent level, followed by 23 ringgit level. So if the stock to clear below this 19 ringgit support, this could reverse the course and trend lower. And also next we have Kiming. Kiming. So the stock is experiencing a pending breakout at 1 ringgit and 13 cent level. If the stock remains bullish, we expect the price to reach 1 ringgit and 20 cent level, followed by 1 ringgit and 20 cent 27 cent level resistance level, and do keep an eye at ringgit and 6 cent support for any attempt of reversal below this support level. Right, so we have one breakout stocks which is KLK, and one pending breakout stocks which is Kiming. Right, so I think if also if I can bring your attention to some of the plantation names like this SOP, because yesterday someone asked me about these stocks, whether if there's still any upside movement after we publish the technical report on this, right? Well, what I can say is that it has rebounding steadily from the golden ratio of 61 percent Fibonacci level, and it also has crossed above the 21-day moving average or the SMA line. But I think for the crucial line is that 465 cent level. So watch this level closely, because if it crossed below this level, there might be a chance for the stock to pull back even deeper before reaching our second resistance at 4 ringgit and 85 cent. And next, of course, KLK, the one that we publish trading stocks for today, right? So yeah, just to explain a bit lah, right? Maybe if you're wondering why Aiman put his resistance at 20 ringgit and 36 cents level, right? Well, if you've been following my BM event on the monthly basis, right? The way we plot our SNR, or the support and resistance, is based on the significant touches lah, right? And if you see here, there's a few touches reject and rebound at this level, where this is deemed as a strong SNR level right here. So hence, after the stock breakout just above this 20 and 20 ringgit and 36 cent level, this shows that it could charge higher to travel to the next resistance at 21 ringgit, followed by 23 ringgit lah. Just like what I mentioned just now, right? And lastly, for the FCPO, well, we remain our negative trading bias for this commodity. And if you look from yesterday's movement, right, it remained sideways yesterday after the latest MPOB data. So a sharp drop in export, right? Also for the month-on-month movement, data been saying that the inventory was higher than the industry expectation, due to the softening in demand. But yeah, I mean, together with that, I believe yesterday Vincent also shared on the production drop as well. Well, to me, I think the market is still now digesting the data lah, right? But if we refer to the technical chart, I believe price could trend lower first before it could rebound at the key level of 4,390 ringgit level, where I believe that this is where the the demand level is hiding at right now. Remain our stop loss at 4,700 level, right? So that's all from me, and I pass the floor to Adam for his update, right? Thanks everyone, and happy trading.
Okay, good morning everyone. So today we have a company update on Gamuda, whereby yesterday they announced that they are securing an interest or stake in a new RE project in Victoria, Australia, which is the Hazelwood North Solar Farm and BESS project. And this is actually the first venture into the state of Victoria in terms of RE. And this adds well into Gamuda's other existing RE assets that they are developing, particularly two RE assets, solar and wind farms in central Tasmania. So back to the Hazelwood North Solar Farm project, the stake that Gamuda would be interested to acquire was not disclosed. But in terms of timeline, construction is expected to begin in 2028, likely with the EPCC being done by Gamuda and commercial operations would likely begin in 2030. And based on our rough estimates, APCC value could roughly be around 1.4 billion ringgit. So, you know, another interesting thing that we came across was that Gamuda, together with the other party, which would have a stake in this Hazelwood North solar farm project, is that they are looking to likely co-locate a data center within the vicinity of the solar farm area, and basically this means that that particular data center could leverage on the solar farm and the battery energy storage systems from Hazelwood North solar project. And this, in a way, is tied to what Australia is pushing right now, whereby they are actually undergoing through a data center uptick. And the government is actually quite concerned that the data centers in Australia would be, relying a lot on the main grid, which could actually pose risks to the main grid in Australia, and hence they are pushing for these data centers to rely a lot more on renewable energy. So that is something that we envisage, and all in, we make no changes to our earnings estimates, given that we await the further details such as the tariffs and also the percentage stake that Gamuda would be interested to acquire. So our target price of 6 ringgit and 19 cent remains. Any catalyst would be if Gamuda were to secure any more local infra projects on top of data center projects. So that's about it for today. I'll pass on the floor to the next speaker, Leng. Thank you.
Hi, thank you, Adam. Good morning, everyone. So today we've got the plantation stats that for the MPOB, as well as the results wrap for the plantation sector for the first quarter. So maybe just let me go on and start talking about the results wrap first. So this is for the first quarter 2026, where we actually saw earnings that were largely below expectations. We saw 8 planters that missed, and 5 planters saw inline earnings, and another one booked better than expected numbers. Really, the sole performer was an Indonesian listed Astra Agro Lestari, mainly due to the lower than expected effective unit cost and tax rates. While the downside surprises came from JPG, SDG, TSH, Taan, Golden Agri Wilmar, London Sumatra, and Nusantara Sawit Sejahtera. So most of this underperformance was due to the lower than expected FFB production during the low cropping season, which led to higher than expected unit costs. For Taan, it was mainly due to unexpected losses at their timber division. If you look at the Malaysian-centric planters, you can see that first quarter earnings did fall quarter on quarter, coming from weakening output, as well as flattish to slightly lower ASP. So output was down about 21.6 quarter on quarter, but was up about 1.6% year on year. So going forward, I think most of the planters are looking for FFB output for the year to improve. They're saying that weather is still pretty normal at this point, although they do caution of a potential El Nino in the later part of the year. For Indonesia, we saw an average of 19% quarter-on-quarter decline in FFB output, and 2.7, which is a 2.7% year-on-year decline. And this is for the companies that we cover. So again, I think what we did see was that Indonesian-centric planters are looking again for low to single-digit FFB growth, low to mid-single-digit FFB growth for the year of 2026, and they're cautioning of the impact of land seizures in Indonesia. As for downstream operations, we actually saw the Indonesian planters seeing relatively stable margins quarter on quarter in the first quarter, and that's probably likely due to the longer term contracts that they have in place. For the Malaysian planters, we actually saw a mix of margin performance. So 2 planters actually had higher quarter on quarter margins, and another one recorded a quarter on quarter decline. So, and although you should have seen, a lower margin on the down Indonesian side of things because of the narrower tax differential between the upstream and downstream products in the first quarter, I think a lot of the margin this time round is also due to the timing of purchases of raw materials, given that most plant downstream players work on a 3 to 6 month forward basis, and the volatility of the CPO prices probably cause the margins to be a little bit better this time around. Going forward, I think, however, the Indonesian players are warning of weaker quarter-on-quarter margins for downstream in the second quarter, and that's coming from the changes in the levy rates in March, as well as the impact of higher methanol prices on biodiesel margins. On conversely, then Malaysian players could see some margin improvement on the refining side, coming from the easing competition from the change in Indonesian tax levy, but continue to warn of demand rationing impact on volumes, because buyers continue to buy on a hand-to-mouth basis due to the high absolute prices. And I think we can also see that when you look at the monthly stats that came up yesterday. So if you look at, let's moving on to the monthly stats, you can see that May palm oil production was actually down month on month. So 7% down month on month. So basically what we saw was continue to see is a decline on month-on-month basis in terms of production this month as well as last month. And probably we will only see an increase in production coming in probably around about June, July, August time, in terms of timeline. So that is when we would start to enter the seasonally higher output season. So exports, as mentioned, exports was weak, in the month of May, where exports fell about 14.5% month on month, and that brought year-to-date export growth to about 13.4%, a positive 13.4% year on year. And this, continued month-on-month retracement happened despite the fact that, CPO is still trading at a large discount to soybean oil of about $436 per ton. And really, as mentioned, we believe that this is mainly due to the demand rationing effect, as well as the sort of Middle East war and the uncertainty surrounding that. If you look at the stock levels as well in the importing countries, we note that the stock levels are also still relatively high, above historical averages, and so that resulted in a pause in restocking activities. So if you look at the stock levels, at the end of May, we haven't got the numbers as yet, but at the end of April, if you look at stock levels, basically for most of the countries except for Bangladesh, we see that they're all holding palm oil stock levels that are above historical average. China is at 30% above, India is at 15% above, Pakistan's at 52% above. So basically, they are not in any dire need to restock, and which is why you still see that the export numbers are weak in the month of May. Going forward, however, we believe that there will be hopefully some improvements in terms of exports coming through, particularly given that the discount between CPO and soybean oil has already narrowed. I think last month was higher at about 500 plus, and now we're at 400 plus dollars per ton. If you look at the inventory levels, for May, we have seen it increase to 2.43 million tons, from 2.31 in the month of April. And obviously this was driven by the lower production and exports. And if you look at stock usage ratios, it is now at 11.8%, so it's increased, and still above the historical average, which is 10%. So in terms of what we expect going forward, we would expect to see inventory levels hopefully narrowing a little bit, as we do expect that there will be some improvement in exports, but probably coming through in the later part of third quarter, and that will be given the fact that Indonesia's export controls will probably start taking place from around about September onwards. So between now and September, you probably see a bit of front loading from Indonesia's side of things, but then Malaysia will be able to catch up in towards the later part of third quarter. So that's what we're expecting to see in terms of the exports. So overall, we are keeping to our tactically positive trading view on the sector. Our CPO price assumptions remain unchanged at 4,004 for this year and 4,003 for next year. Year-to-date prices is at 4,327 ringgit per ton. We continue to keep our top buys, which for Malaysia include Johor Plant, SOP, IOI Corp, and ST Guthrie. So that's all that we have for today. Thank you very much for joining us. Happy trading, and we'll see you again tomorrow at RSB Morning Kappa at 8. Thank you.